Good morning, team. Uwe Jacobs Property Strategist from Property Friends, live from location. Well, it's early in the morning. The early morning bird catches the worm, 10 to 6, on the Strand in Townsville. Isn't that gorgeous? Magnetic Island in the background, a beautiful walk. What can be better than that? Life is great. All right, Townsville. Is it still a hotspot? Well, the jury's out on that one. The market is certainly still improving, increasing. Capital gains is further coming. But in my view, the big growth of 17% plus per annum has come, and I would not expect more than the normal 5 to 7% growth from here on in. The builders are quite busy. It has slacked off a bit, but still plenty of work. The biggest challenge is to find suitable land. There are a couple of developments coming up, but land is very hotly contested. So in the new builds, there is quite a bit of pressure in the market. And the amazing thing is that there is in my view, minimum 6 to 9 months lag in the statistical data. So when you hear that Townsville is a hotspot, is one of the most prevalent areas to invest in when you look at the data, well, that data is 6 to 9 months old. Meaning that the best deals were 6 to 9 months ago. That's the difference between being in the market and watching just the data. So that 6 to 9 months cannot of course, make a huge difference in regards to capital gains and or what deals are available, how much pressure is in the market. As I always say, the best time to invest in property is 20 years ago. The second best time is today. With the strategy of having sufficient having sufficient rental yield that you can sit out a market and wait for the capital growth that invariably is coming, that just works for us. Even if we get the timing wrong, by the property not costing you any money, i.e. it's self-funding completely at 100% calculatory finance, that means that you can just sit on the property investment and continue with your life until the big money, which is the capital growth, comes. Now, that strategy has been faring very well for us and our team of investors for 23 years. And with a client return rate of 72%, which is staggeringly high, that proves that our system is working. It is just incredible to me how many people, have a look, how many people are exercising here. And I'm doing the same, which is great. So exercising is also what we need to do as property investors in regards to exercising our muscle, specifically in regards to knowledge. I can't stress enough the importance of doing research off-site initially, and then really a step that a lot of people miss out on is the on-site research. I keep hammering that point. As an investor, spending six, seven, $800,000 for an STA, even more. Um, what is 2, 3 days out of your life? Call it, heck, call it $1,000 in relation to a $600,000 investment. So as far as I'm concerned, we should all go into the location that we're looking to buy in and check it out. Case in point, I've just come from Cairns. A beautiful couple that has been with us for a number of years. Second property, just about complete. Still, they came and checked it out. Now they're combining that with a holiday in Cairns, which is a beautiful place to make a holiday in. And really, that is just a confirmation that what they've locked in 8 months ago was the right thing. And at $200,000, in excess of $200,000 worth of capital gains, that is unquestionable. So, and at a rental yield of 7%, 7.2% in fact, that is unquestionable. Yeah, the Cairns market has been really good to us. But back to Townsville. Opportunities out here. Well, there are still opportunities abound, harder to find, specifically if you want to go new house and land. Some opportunities in established, but to be honest, call me lazy, I don't want to do established. I hate the constant phone calls every month from the rental manager. So the hot water system has broken down, the toilet is clogged, whatever. With a new property, I get the certainty of having 5 to 7 years, no maintenance, no issues. And quite frankly, I like the idea of doing the work once and then being done for 5 to 7 years. Of course, we need to manage the manager. By the way, have a look at that. I'm at the Longboard restaurant. Unfortunately, still closed. Sea Bar next door is still closed as well. But I will grab a coffee elsewhere in a short amount of time. So opportunities are still there. SDAs in Townsville is complete basket case. The market has been completely flooded by the marketeers. So much so that unsuspecting investors that didn't do their research, that didn't do their due diligence, are now sitting on $800,000 to $1 million properties in the wrong location, with the wrong design, with the wrong fit out, and cannot rent them out. They are not finding any participants. We find that 2 and 3 bedroom SDAs are being tenanted, if you can get a tenant, a participant to with an SDA plan, that they are tenanted by one person, because there is such an oversupply, and a lot of investors say, well, look, a $50,000, $60,000 income is better than nothing. And really, at an $800,000 asset value, you don't want to rent out the property normally, because you're blocking the property from the potential $60,000 income for one participant to having, let's say, $30,000 income at, call it $600 a week. So that doesn't make sense. And if you have no income, now they're opening up here. I'll go around the corner. If you have no income, any income is better than no income. So yeah, it's just one of those things. Very hard. By the way, if you're sitting on an SDA that you can't get tenanted, we've got a strategy for that. Of course we have. Yeah, so that's good fun. It just proves the point, whatever you do, don't believe the marketeers. If somebody tells you that you can get 15, 18, 20% with an SDA, I would want them to show me examples where that has been working and want them to show me examples where it has been working for a number of years. The SDA market can work very well if you have the contacts into the industry, if you can tenant the property. SDAs are a very specific investment. I liken it to a commercial investment because it really is. You have a purpose-built dwelling with a specific purpose. And if you don't have a participant, if you don't have established relationships with skilled providers, with the occupational therapists, with the support coordinators, don't go there. Please don't. Because there is, generally speaking, oversupply in SDAs, especially in the marketeering hotspots, where properties were sold to unsuspecting investors. Press hard, sign here, 5 copies. Yes, it'll be all good. Well, it ain't. There are a lot of areas around the country where the marketeers have plonked too many SDAs into the market, especially high physical support. We find that there are still areas where you can get good tenants, good participants, where you have got a good chance of getting occupancy, and that is full occupancy, whereby we tend to do 2 bedroom SDAs, both rooms with an ensuite and of course with a third bathroom. Um, in the robust area is another area where you can get still good returns and good occupancy. Um, but with a high physical support, I definitely wouldn't go over 2 bedrooms. The NDIA these days seems to be approving only 3 bedrooms, but if you've got a 2 bedroom SDA with a separate lounge that can double as a third bedroom, if you want to set it up that way, which we do, then you have got a good chance, a much better chance to rent that out. Think about it. If you are a normal tenant and you need to share because of costing, because of whatever reason, would you rather share with 2 or with 3 people? It ain't rocket science, is it? So there you go. In regards to our latest venture and fun of business, our new company, Factory to Key, it's absolutely going berserk, which is a good problem to have. I got nothing to do anyway, so might as well load up the plate a bit more. A lot of fun. We're making real impact, real change into the building practices. Um, our last build in Geraldton, for example, took 2 years, 2 flyman years from hitting site to completion. That is just unacceptable. And I'm getting into a rant here. Think about it. So you've purchased the land, you're paying interest on the land, and it will take 2 years to complete the property for you to get income. That is just not on. We've got to change what we've been doing for 150 years in the building industry. So that is exactly what Factory to Key is doing. We're taking the dwellings from the factory floor or from the port of import in case of imported units, and there's reasons for either way, and we deliver it to site, get the installation done, get the council approvals done, get everything done until we can hand over the key. Now, here's the difference. I just said before our last build took 2 years. We are doing a 230 square meter, 4 bedroom, 3 bathroom, double garage property. Stunning design. So that's a big house in 6 weeks. So from hitting site, there are 4 containers, 4 flatbeds on trucks that are hitting site, and in 4 weeks the property is finished. Add another 2 weeks for landscaping, fences, completely finishing it off. And that means within 6 weeks, you've got a 230 square meter property. Incredible. And that is all a function of taking the risk out of building, meaning that in the controlled factory environment, you can put the panels, the modules together, and it doesn't worry you whether it's 40 degrees outside, whether it's blowing a storm, hailing, gale, whatever. You just put the panels together. And then it's up to logistics to have your design completely correct, to hit site, and just like a Meccano or Lego set or like a IKEA kitchen, put it together. Now, it just so happens that our box where the IKEA kitchen comes in, so to speak, is a bit bigger. It's a 40-foot container, or in the case of the 230 square meter home, gorgeous design by the way, that's 4 containers. Anyway, I am getting into a rant, so we won't go there. Factory to Key is going very well. We are operating now Australia-wide with more than 30 suppliers. And the real fun is not only can we help the suppliers by taking the duplication and the inefficiencies out of the supply chain. Again, case in point, you think about 4 different manufacturers in, let's say, Melbourne, that all 4 of them are approaching the same council. All 4 of them have to have teams or find builders that can do the erection. All 4 of them need to strategize and get the supply chain right. All 4 of them are dealing with the clients. Now, Factory to Key can optimize that and will take care of all of these matters, including dealing with these pesky clients. Geez, it could be a good day if it wasn't for the clients, because the manufacturers, all they want to do is do their designs and run their factory floor, ideally at full capacity. So, yeah, that's where Factory to Key can really make a change. And we're finding that the acceptance level is tremendous, both on the compact end. I'm in sales, so I will never use the word small. They are compact homes, starting from a Class 1A building at 60 square meters to, well, 230 square meters. We can offer apartment blocks, duplexes, up to 660 dwelling university campus. We've just tendered for 234 dwellings for the Victorian government, put an expression of interest in. We are on board with the Tasmanian government for up to 200 dwellings. So it's really hitting the deck, and it makes sense. We've got a housing crisis all over Australia. And that, by the way, is not a housing crisis, it's a labor crisis. We just don't have enough skilled trades. But anyway, I'm not going to get into another rant. Okay, this has been long enough. I hope it's given you a bit of an overview of where we're at in the property investment market. And I kiss you goodbye with that view. Stunning day. Now it's time for coffee. Have a good one, people. Bye-bye.